All right, so it's a couple minutes past. I just want to go ahead and get started here today. I know that everybody's got a busy schedule, so just want to quickly go through our simple IRA presentation that we have here. I know that today's world is a little bit crazy, so I appreciate you all joining me virtually here. My name is Jake Stazik. I am the president of Corpay Retirement Services. Before we begin, I just want to direct you to a quick disclaimer on the screen right here. Corpay Retirement Services is a registered investment advisor. However, we're not going to be discussing specific investments today, and this presentation is not intended to provide investment advice. I will give you a second to quickly go over that disclosure, and then we can get into it. All right. So today we'll be going over our flagship retirement offering, the Simple IRA. First, we'll go over what a Simple IRA is and how it compares to other retirement plans. Then we will go over who is all involved in the setup of the plan as well as the ongoing management of it. We'll go over the fees and the benefits to both the employer and the employee. And lastly, we'll provide some information on how to contact us or to schedule a time that we can go over in more detail for you if necessary. So, what is a simple IRA? Like most small business owners, I'm sure that you've heard of the 401k plan, which is easily the most recognized retirement plan out there, but it's not always the best fit for a company. A simple IRA is not actually anything new. It's been around for several years. It's just never been set up in kind of an efficient manner. A simple IRA is very similar to a 401k without some of the bells and whistles that come with a 401k. And because of this, a simple IRA is usually a fraction of the cost and the time needed to implement. At the base of the simple IRA, there are two types of contributions. There's an employee salary deferral, so just like you would have in a 401k plan, and there's also an employer contribution, just like you would have in a 401k plan. Both of these types are considered types of contributions are considered pre-tax, which for the employee that means that they can lower their annual income and taxes, and the employer can provide a contribution that's not subject to FICA taxes and is deductible as a business expense. Employees may elect to have any percentage or dollar amount of their paycheck deducted and put into a simple IRA. The cap for employee contributions is 13,500 for 2020. Plus, if the employee is over age 50, they may put an additional $3,000 into the plan as a catch up contribution. Employers have a few options on their contribution. They may provide a dollar for dollar match up to 3% of the employee's gross comp, or they can give a 2% flat contribution to all employees. Most employers choose to offer the matching contribution because they may elect to do a 1 or 2% match for the first 2 years that you have the simple IRA set up and then move to a 3%. Simple IRAs run calendar years, so once you've established one, you are all set until December 31st of that year before you can either make changes or if you want to choose to shut it down, you'd shut it down 2 months before the year is over. You'd send out that notice to the employees, no cost to do so. Unlike a 401k, however, a simple IRA does not require involving a third party administrator who monitors and tests the plan, nor do you have to do any filings with the IRS. And so there's a lot of things that are involved in a 401k at the end of the year that you don't have to do in the simple IRA. Basically, we provide you with a new notice for the next year. You give that to your employees, they're allowed to enroll, and you move on from there. It's a very, very simple process at the end of the year. So why would we be looking at offering a retirement plan in the first place? If you don't already know, we have a huge retirement crisis on our hands. People are finding themselves largely unprepared for retirement. I think a lot of people found themselves largely unprepared just for, a short. I shouldn't say short. It's been a couple months now, but for an emergency like we've had with COVID, and so there's been a lot of changes that have happened out there. And some states, such as California, Oregon, and Illinois, have started to implement mandatory retirement plans that essentially provide access to accounts for the employees, but usually end up adding significant burden, administrative burden to the employer And so that's why we've developed these programs that we have, basically is to make it easier for the employer to satisfy upcoming state requirements, or to have something in place that's very, very easy for them to monitor and maintain. You can see a little statistic on the screen that retirement is going to be a major issue in the coming years. We want to assist employees and employers by providing a solution that's going to suit their retirement plan needs. So the stat on the screen here just kind of shows how much money that we will need in the future versus how much money that we think that we will have 20 years in the future here for retirement. So a significant gap there. Not only is the huge gap a cause for concern, but with the way that the labor market has been prior to COVID, and it's starting to come back a little bit now, and honestly, a lot of employees have just gotten used to being able to have employer-provided benefits. It's becoming harder and harder to hang on to good and talented employees. We know that businesses that have less than 100 employees are at a huge disadvantage to those that have hundreds or even thousands of employees. And this is why we've developed this simple IRA platform. We want to be able to help small businesses compete with larger businesses and offer something that's going to be both affordable and easy for them to implement. Okay, so why not a 401k? I know you hear a lot about 401k. It's definitely the largest, program that is out there. So why not a 401k? And as I said before, a simple IRA is typically a lower cost alternative to a 401k. But what you might not realize is that the benefits of a simple IRA really aren't that much different than those of a 401k. They both are available to all employers as long as you have less than 100 employees, and they both provide for higher contribution limits than a traditional or a Roth IRA. The biggest difference between the simple and the 401k is just in the word simple. It only takes one quick form to get a simple IRA up and running, and both the simple IRA and 401k provide pre-tax benefits for employees and employers, and they both may qualify for a retirement plan startup tax credit that provides tax credits to help cover the costs of the plan. And actually, those tax credits have changed for 2020 and have increased, and I will go over those towards the end of the presentation here. So specifically for our simple IRA that we've developed here at Corpay Retirement Services, we have low plan setup and administrative costs. It's half the cost of our 401k plans that we have. And we have very, very competitive pricing on our 401k plans. And we were able to develop this simple IRA program for about half the cost for the employer of our 401k plan. It also has full 360 integration. And what that means is that when updates are made by the employees on their simple IRA website, the payroll is automatically updated. And so this eliminates the need for an employee to come to you and say, hey, I want to make a change on my payroll to my simple IRA deduction. Can you go ahead and go in there and change that? They can do that automatically. It communicates with our system and updates for them within 24 hours. Employees will have anytime access to an online portal where they can make changes to their investments and their deferrals, as well as run reports for fees or performance for any given time frame. Because these are IRA accounts, and this is a big difference too between the simple IRA and 401k, the employer has no fiduciary liability. And what that means is you're not responsible for the investments that are chosen by the employee in that simple IRA. Once it goes, the money is submitted to that simple IRA. It is on the employee to choose the investments in that plan. However, we do provide, we take care of selecting and managing the update and updating the investments in the plan for the employees. And so we do provide a menu of available options for them. We do have a default option if they do not select anything. And we are a fiduciary advisor, which means we are not paid by any mutual fund company, and there are no hidden fees in the plan. So employees will be able to contact us if they have questions regarding their investments, or if they want to know, what's going on fee-wise in their plan. We can run a report for them and show them that as well. And just to give a quick recap of what the perks are for the workers, the simple IRA allows them to save up to $13,500 plus a match in their account, and it does not impede on their traditional or Roth IRA contribution limits either, so they can contribute both to a simple IRA and to a Roth IRA or traditional IRA, provided that they fall into the income requirements and get an additional contribution in that way, which would be very similar then at that point to a 401k contribution. And they also have access to our professionally selected investment models and funds that we have in the plan. Current day, we have all Vanguard index funds in the plan. They're Admiral share class, which is their lowest share class. And so usually people are familiar with Vanguard and index funds. And that's typically what we tend to use in these, just to keep them as lowest cost as possible. There are two types of fees, both an employer and an employee fee. Listed on the page here are the employee fees. And so the employees pay $48 per year, which is taken out $12 quarterly, and 1% of the assets on their account annually. And so basically, on a $5,000 account, the monthly fee would be $8.16 for the employee, and that includes all of the stuff that I went through earlier. So the 1% covers the advisory services, and the $48 covers all of their access to their online portal, all the reporting that is done to the IRS on their account at the end of the year, all included in that. They will be able to, again, access our investment support anytime by appointment. And usually, when I mean anytime, it usually means anytime. So if it's a weekend, an evening, early morning, whenever they need to reach us in terms of the investment support, they can reach us. The account service support, so that's if they need to reset their password or if they have questions just with operating their account, not specific to the investments. That's provided by a support team that works 8 a.m. to 8 p.m. Eastern Time, Monday through Friday. For the employer, there's a one-time setup fee of $250. And then the cost per payroll depends on how frequently you run your payroll with us. So if you run payroll weekly, there's a $10 per payroll cost. If you are biweekly or semi-monthly, it is a $25 per payroll cost. And then if you run monthly, it is a $50 per payroll cost. These fees are all inclusive of any participants or no participants. So once we set up the plan and get it going, we do send out enrollments to the employees to get them enrolled, but we have to have the plan established and be submitting payroll to the plan, tracking that the income for the year for the employees. So once we get that set up and going, these fees will come into play for the employer. Again, if you are running weekly, it's 10, bi-weekly, semi-monthly, it's 25, and monthly, it's 50. These fees may qualify for a retirement plan startup cost tax credit, which I will go over on the next page here. I want to make sure that I show that to you as well. And then anybody who is in this webinar, and I have the list over here of everybody that was in the webinar, will receive the free setup. So the $250 setup fee, anybody that attended the webinar, that will be waived for you, provided that you sign up between now and the end of July. And that tax credit that I've been talking about. So this is a new tax credit for 2020, and it's a very good thing especially for simple IRAs and 401ks, because it covers employers' sponsored plans. So basically, if you have an eligible employee, you may be eligible for a tax credit. An eligible employee just means somebody that can participate in the plan that is working for you as a W-2. And so the tax credit is either the $500 or $250 per eligible employee, or $5,000. So basically, what happens is you can get, if you have 3 employees, you can get $750 in tax credits. If you have 2 employees, you get the $500, but at bare minimum, you would get $500 in tax credit to cover the administrative costs of the plan. So that $10 per payroll, if you're weekly, comes out to about $520 a year. This tax credit is eligible for the first 3 years that you would have this plan set up. And so you'd be able to cover virtually all of the costs in a tax credit from the Secure Act that came through at the end of last year. So with that, I just want to kind of go into, I do have my chat open up here. I will unmute everybody briefly here. If you have questions, feel free to ask them. either through the chat or once I unmute you here, ask them and I will be able to answer them. Don't be afraid. I'm sure if you have a question, somebody else has it. I do have some questions that were emailed to me ahead of time that I will go over if there are not any. But other than that, I will follow up with most of you or all of you if I can. I'm trying to just make sure I'm writing down everybody that was in here to see if you have further questions on how this works and more specifically what it'll do for your particular situation. Each situation's a little bit different. So we do like to have just a brief discussion just to make sure, but I'll go ahead and unmute everybody. If anybody has any questions, feel free to shoot them over. One of the questions that was emailed to me ahead of time was how long does this take to set up? Basically, from start to finish, it takes about 2 weeks to have this set up. So basically, there's an employer form that goes out that establishes the basically the plan documents for the year. And from there, once we get everything in account set up and everything ready to go from there, we have it up and going with the participants enrolled in about 2 weeks. The employees.
Jacob?
Yes, go ahead.
Sorry. My name is Victor. Quick question. Does everybody in the company have to participate?
No, so that was actually one of the questions that I got emailed ahead of time as well. There is no minimum participation. The biggest thing with the simple IRA is there's not a whole lot of ways to limit who can participate in the plan. We can make it so employees have to be with you for a year or even 2 years, but for the most part, we say, you know, open this up to all of your employees. Your full-timers are more likely to participate than your part-timers. It's very, very rare that part-timers participate. But you do not need to have an employee participate in the plan in order for an employer to participate in a plan. So there's certain advantages in a simple IRA versus a 401k that if you think just as an owner, you would be the only one participating in the plan. There are advantages that you would have in the simple IRA over the 401k to do so there. Mainly those are costs and things that you would have to do for the employees, but no, there is no minimum participation in the plan. I have quite a few actually that just the owner is the only one participating in the plan, but it is available to the employees if they so
Okay.
choose.
I might have missed a few minutes of the beginning. So this is a pay-as-you-go type situation, right?
Correct. So the
Okay.
the match contribution for the employer and the deductions that are done for the employee are per pay period. So
Okay.
if you are trying to get, let's just say it's December and you haven't done any contributions through the year, and you want to get the full amount in at the end of the year, you have to have that amount of payroll left in order to contribute. So you have to have, it's not like a traditional IRA where you can submit a check to it. It is a payroll deduction, so it has to be, you have to have that payroll for that time frame in order to contribute.
Yeah, no, the only reason I asked is because we do have one in place, but catching up with all these payments to send it to a third party was a little is getting a little difficult.
Sure.
So we just wanted to, and we can transfer simple IRAs to you guys.
So simple IRA transfers depends on what your current simple IRA, how it's set up, whether you can do it. You can transfer them and you can roll over simple IRAs to other simple IRAs at any time. But
Okay.
there's two types of simple IRA plan documents out there. And one of them specifies that you have to use a certain company for the whole year. And one of them specifies that the employees have the freedom to choose who they want to use through the year. So it depends what your original document was. And I can
Okay.
talk with you a little bit more about that. We can take a look at that. But
Yeah,
otherwise,
not a problem. Not a problem.
otherwise the change needs to happen at the end of the year then.
Okay, fine. Thank you.
Yep, no problem. Are there any other questions? I think I had one more that was emailed in to me. I just want to make sure I get it. So how often can employees make changes? So employees can make changes at any time to their deferral. What we do is, because it's integrated with the payroll system, we don't limit them to a certain enrollment period. That is something that's common in simple IRAs where there's a certain enrollment period. However, with it being integrated with payroll, where the employee just needs to log in and make a change, we didn't see the need to limit that enrollment window. And so they can make a change at any time to their simple IRA contribution through their portal, and it'll automatically update the payroll. Are there any other questions? All right, perfect. Well, I appreciate you all coming. And don't forget that if you do set up in July, that you will have that setup fee waived. That's a good fee waiver there for you. I'll be reaching out to everybody that attended and those that didn't attend, just to see if you have any further questions or any details specific to your company that you want me to go over. But I certainly appreciate you all taking some time out of the day today, and I will definitely be in touch. Christy, my contact info, it's supposed to be on this slide. I apologize. My direct line here, my extension is 7115. If you call it the core pay line, my direct number is 678-252-9764. And my email is jstaszak@corpay.com. But if you email the retirement@corpay email, that will come to me as well. So that's probably the easiest way. You don't have to remember how to spell my last name, but feel free to reach me. I'm virtually available anytime I'm not giving one of these presentations. So feel free to reach me. I will be, let me just see, I usually reserve all of the next day after these. And I know with the holiday coming up, this is kind of short week, but I am open all day tomorrow. So feel free to shoot me an email, and we will get together on any questions that you have. But I will be reaching out, like I said, to communicate with you on specifics for your company as well.
Thank you.
All right. I appreciate it. Thank you, everyone.
Thank you.
Mhm.
Thank you.